Hey you, welcome to today's backtest. Today's backtest is on Monday's trade, March 9th of March 2026. And this is the very day right here, 9th of March 2026. After price took out these lows, you see the wick trading below these lows and then running upward. So we are going to look at the run up to these points for this very day. Down to the 15-minute time frame. So we are going to look at how this looks on the 15-minute time frame and how you can take a trade like this on the 15-minute time frame, and also look at how this formed on the 5-minute time frame too. So this is the 15-minute time frame, and prior to the New York AM session, the run up in price took place during the New York AM/New York PM session. Okay, there was a continuation of the run up during the New York PM session. You see this run up from these points after this drop down. From this point up, this was all during the New York PM session. Okay, the initial run started during the New York AM session, and the lows taken out were formed during this low was formed during the London session. Okay, this was Asian session for March 8th. This low was formed during the London session. This low was formed during pre-market session. So these are the lows being taken out by price. This is a 15-minute time frame, by the way, and I believe your time zone should be set to New York time zone. That's the one I normally use. That's the time zone ICT Michael Huddleston also uses. If you follow up with Michael Huddleston, you know this. So below these lows taking out our sell side liquidity. And during the market open, okay, during the time period of the market open 9:30, I was when price then pulled down to take out these lows, these relative equal lows, and you can see this bounce up. You can also see the Monday first presented fair value gap for those who know what first presented fair value gap is and how it is formed. And also, after taking out this sell side, you can see this run up in price with displacements, leaving a very small fair value gap open. So I'm going to annotate this fair value gap with a different color so you would be able to capture it. It's very small. This is how it looks. This is how the fair value gap looks. The fair value gap looks on the 15-minute time frame. And also, apart from the fair value gap, which price dropped down, okay, to bounce up, you can also see these bearish candles where price was dropping down to take out these relative equal lows, to take out sell side liquidity. These bearish candles, we have one at 9:30. This is the 15-minute time frame, by the way. One at 9:45 and the last one at 10 a.m. So we have three down close consecutive candles, followed by two up close consecutive candles. Okay, so this is an order block, a change in state of delivering price. So let's say you didn't take note of this fair value gap. You should at least take note of the order block formed in price. And you see price trading down and bring out the order block. So this bearish candle is our order block. Okay, the moment the bullish candle trades above the open of this bearish candle, it validates it as a bullish order block. So price trades down into it twice. One, the first time trading into this fair value gap. It's a really small fair value gap. And the second time, it traded up into the Monday's first presented fair value gap and traded down into the other block once more before bouncing up during the New York PM session. So I'll drop to the 5-minute time frame, but before that, let me demarcate the New York PM session. New York PM session starts at 1 p.m. by the way. Okay, so dropping down into the 5-minute time frame, this is how this looks. You can see price is very jagged at the end. At this end, okay, so price is taking out sell side liquidity. Okay, so sometimes it will be jagged like this after taking out sell side liquidity. Okay, it gives more confirmation that price is likely to go up because it has done the damage below. So this is how price displayed on the 5-minute time frame. You can see the sell side liquidity. You can see this low and this low. So you see, after the Monday's first presented fair value gap was created, after the market opened at 9:30, price dropped down with displacement. You can see this gap right here. Let me remove this 15-minute order block and 15-minute fair value gap. You can see this big gap in price. Okay, so this is a bearish fair value gap. Okay, if price was to go down, is going to use this as a bearish fair value gap that's trading up into it to rally down. Okay, but price is to go up after taking out the sell side liquidity, and the daily bias for today that I had in mind was bullish. Okay, so the daily bias for this particular day is bullish. So after price takes out this sell side, these lows, taking out sell side liquidity, price will likely want to run up, right? So this is a bearish fair value gap, and if price is to go up, price is going to use it as an inversion fair value gap to rally up. Like I was saying, price is going to use this as an inversion fair value gap to trade up. How is that done? Okay, after the inversion fair value gap is being created, okay, price will trade above it, close above it. Okay, after closing above it, when it trades down into it, okay, it's going to use that point as like a reference point to bounce up, just like price did right here after trading, closing above this inversion fair value gap. It comes down into it, rallies up again into the Monday's first presented fair value gap, and you can see how it respects it right here, trading into it, bouncing, and trades into it finally during the New York PM session and before trading higher. So let's break this down. After price trades into the sell side liquidity, taking out those sell side liquidity, it trades up, okay, trades up above this inversion fair value gap, trades up above the Monday first presented fair value gap, and trades to take out these highs, taking out what? Binary buy side liquidity, and also you can see this gap right here. Okay, at the same time, it's trading into this gap right here. You see how it respects this. Remember, the main bias is bullish. So scalpers who understand how price works will definitely trade this. Okay, they'll sell at this point and buy at this and close your trade at this point, knowing price is bullish overall. So this is like a scalp trade. So if I was to take it by using this inversion fair value gap, how will I go about it? Okay, so this is how you go about it. And if you're sure of the daily bias and sure of where price is likely to run up to, these are you go trading the inversion fair value gap. So after price trades into the sell side to take out sell side liquidity, okay, and price is running up, and you took note of the inversion fair value gap. Okay, after price trades above the inversion fair value gap, not just trading above it, trades above it, okay, with good displacement and closes above it. Okay, you can set your buy limits at the top of the inversion fair value gap, and your stop loss can be at the low where the inversion fair value gap was being created. the candle where the inversion fair value gap, you see this candle where the inversion fair value gap is being created. So the low of it, your stop loss can be there, and your buy limits at this point. Okay, then your take profit can be either at this high, which is a good point to take profit or to take partial, or at this high. You can see how price reacted to that. Even traded above these highs right here. So resting above these highs are buy side liquidity. So you see how price comes down to trade into the inversion fair value gap. I was not expecting it to drop up to this point, even to close below the inversion fair value gap. But it did, and it was even close to my stop loss. But I kept the trade on, and price started rallying. And during the New York PM session, let me take your eyes to something. Okay, prior to the New York PM session, these lows were being formed. I'll have to take it back. Okay, so apart from the inversion fair value gap, apart from using the inversion fair value gap approach during the New York AM session, you can also remember on the 15-minute time frame I showed you an order block. Okay, so on the 5-minute time frame, the order block can be refined to this. You see this down close candle and this down close candle right here, followed by these up close candles. Okay, so this down close candle is an order block. This is another block. Make this board. You see how price trades down into it. Okay, so this also can be a trade, and okay, you going long at this other block. Your stop loss can be at this low or usually at this low, and take profits this high or that high right there. So any approach you would want to use. And like I was saying before I brought you back, okay, prior to the New York PM session right here, you can take note of these lows right here. Okay, these are relative equal lows with low at the left lower than this one at the right. Okay, validating it as an high probability sell side liquidity. So you see how market traded down below these lows, also trading into an order block. This is another block. This is another order block. So this is down close candle followed by these up close candles. Okay, so if I'm to refine this, this is an order block. So this is like double confirmation. Okay, price trading below these lows. That's one to take out sell side liquidity, and also price trading into this order block. That's two confirmation. Also, prior to that, you can see this small fair value gap right here inside where this sell side was being formed. Let me bring this out. This is a fair value gap. This is how it looks. This is a fair value gap. Let me send this to back. Don't work. Okay, you can see this fair value gap. It's a really small fair value gap. That's like three confirmations. And lastly, price is also trading into this inversion fair value gap. So if I drop the midpoint of the inversion fair value gap, this is how it's going to look. So this is the midpoint of the inversion fair value gap. You can see the line. You can see this line, this faint line. Okay, this is the midpoint. So price is staying at the upper quadrant of the inversion fair value gap. Okay, that was also confirmation that price is bullish also. So I was expecting a run up in price even during the New York AM session. Like all this movement in price for me while holding the trade was really frustrating. I was thinking, okay, price will start running up, spooling up just like it did on the New York PM session, but price waited for the New York PM session to start its rally upward. And you see how this looks. So New York PM session from 2 p.m. price started spooling and running up. So if you found this insightful, drop a like, subscribe, share the video, and see you on the next backtest. Have a productive week.